Our focus is people, not just the investors, but the tenants as well.
And again, at the same time, we're making sure not to be jerks. We're running these ethically and making sure that they're nice places to live for people.
Hey guys, welcome and thank you for joining us today. Over the last few years, we've heard a lot of discussions around institutional capital entering the mobile home park space. And depending on who you ask, it's either the best thing that's happened in the industry or the worst. So today we're going to have an honest conversation about what we actually see on the ground. Tim, how are you doing today?
Vinny, nice to see you.
Likewise, this is going to be a good conversation, I think. So Tim and I, and Matthias, we recently went to the Best Ever conference, and we spent some time with operators, family offices, and institutional investors. And we learned some things that may surprise you, right? So this is going to be a really good webinar, I think, to educate folks on what we're seeing. So let's start with the big picture, Tim. Everybody talks about private equity, institutional investors moving into the mobile home park space. Is that actually happening, or is it just media hype?
The short answer is yes. Yes, they're definitely moving into the space. I mean, there was that big plan, a buyout of Yes Communities by a PE firm, and the reality is that money chases money, right? It chases yield. It chases how can I make more money with the money I have, and for years and years it was in multifamily apartment buildings, and now they are seeing more how we have a great stable tenant base, that assets that cash flows very well, very predictably. And so yeah, there's a lot of these bigger companies that are coming in and just trying to be part of it.
Yeah. Do you think it has changed over time? Is it very different from 2 years ago?
I don't know about 2 years ago, but in the 6 years or so that I've been in it, it's different for sure. For a long time, they didn't want to touch the asset class. It's a gross asset. Who wants that? It's all D class. And like, why would we even want to get involved in that headache sort of thing? But yeah, over the past little bit, they've definitely been sticking their toe in the water. Like, I go to conferences, I'll see more and more of representatives from different private equity companies that are just trying to understand the asset class and, throwing money in any way that they can sometimes, which I don't agree with, but it's just how can we get involved in that craze sort of thing? And it's like, okay, like y'all have seen it. Either you have experience with it, or a company that people have experience with it, and it's working. And so yeah, there's more and more people that are coming, or more and more private equity firms that are coming into the space.
Yeah. So individual investors, they see this, right? They read about it. What do you say to the individual investor that immediately think, hey, am I going to have an opportunity to invest? Or, is this going to push me out of potential good investments? What do you say to that?
First of all, maybe, depending on the group, right? All I can really speak about is what we're doing. And we are very focused on really just buying more mobile home parks. And so, we are exploring working with different PE firms and family offices and stuff like that. But we are very focused on creating a robust source of investments from different buckets. And, your retail private investor, we're still keeping that door open for. We see the opportunity, and we want to continue to work with the wonderful accredited investors who are already working with us, and more people in the future. So it's not like we're shutting the doors, we're just expanding the door.
That is correct. And like I share with our investors, our goal is to build a relationship with them. And when they invest with them, our desire is that it's not a one and done kind of relationship, right? We want to be able to grow together. That's the desire. So yes, we are not closing the door on the retail investors. They're great, right? And for the most part, they were focused on wealth generation. And if we can partner and make that happen, why not? Right. So let's talk about something that doesn't get discussed enough. There's some negative headlines surrounding the mobile home park space that involve large ownership groups, right? There's a lot of negative connotation behind that. Why do you think those situations happen?
Well, I mean, sometimes these bigger groups are coming in and they're raising rents like crazy day one. It's not a way that we operate, nor it's something that we really agree with, but it's reality, right? So the parks we bought in December, I know one of them sits next door to a big PE firm that bought the park, and they, I want to say, jacked up rents at least $200 a month, like from day one. And so, whereas we go in and gradually bring up the rent to, whatever the fair market lot rent is or home rent, whatever, we try to stay really close to that and go up gradually. They came in and they raised rents dramatically on day one, which, I mean, it hurts people. It hurts. It's supposed to be affordable housing. Like, I mean, that's a lot of money for a lot of people. So it's super unfortunate. So I'd say, yeah, there are bad things that are happening. There are unfortunate things that are happening. And I mean, it's like, look at it from their perspective. It's like, okay, if you have 100 lots and, you're increasing by $200, that's what, an extra 20 grand per month, extra $240,000 in revenue, expense ratio on it. That's like 120 to 140 more $1,000 a year in NOI. And I mean, again, rough numbers, you put a 10 cap on it, which is not a 10 cap. You're improving the value of the park at least by $1.5 million, if not more than that. So it's like, I understand it. I get it. Like on a spreadsheet, it's like, oh yeah, this is all I have to do. And now the value's raised and I can get a loan against that from a bank and like pull out tax-free cash and all that. But it doesn't consider the actual like human aspect of it, the people that you're kind of putting out. So, one reason I really like being a smaller firm is that we are like, we're communicating with people. It's not just this number on the spreadsheet. Oh, is lots, blah, 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 this. It's like, no, this is a person. Is it, this person's name and like they communicated this and how can we make something that works for them? So it's a weird balancing act. Not weird. It's a balancing act for us, and it's an interesting thing to really be witnessing to in the market in what we do and like see how other people do things.
Yeah, I completely agree with that. Our focus is people. We always say that, right? Not just the investors, but the tenants as well. That's why we want to take care of them. I think coming in and increasing the rents like that on people is not, it's not right, right? Because there's a reason why they live in a mobile home park. The nice thing about our business plan is that the returns that you see are based on gradual increase of these rents, right? So it's not really hindering the tenant, right? Gradual increase is way better than day one. Now you have to pay $200 more. That's just not right, right? So our model works, and I like that. So we know that to be successful, you need capital, right? And you need good operators. If you're a good operator and you don't have the capital to close, then, it doesn't work. But at the same time, you need good operators because you can have all the capital in the world and you can drown a good deal, right? So what do you think separates successful operators from the not so successful operators?
It's a good question. I mean, so operations, especially right now, are like the most important thing. People talk about finding deals and closing and whatever, and it's fine. It needs a skill, but without solid, tight operations, things can get away from you. What's interesting, going back to the PE thing, yeah, like, we are talking with different firms that do have a lot of money, but they don't have the operational experience. And so, like, the people we're talking to, they realize, like, okay, instead of getting really good at operations, why don't we partner with someone who has a track record and can do the things that are needed to get the returns? I really value conversations like that because, I mean, like they're really, really great at raising capital and, serving their investors. And we are really, really, really great at operations. And like it's a lot of potential synergy there. And then, going back to the other PE operators who are just getting in and jacking up rents, I mean, yeah, maybe they have to question themselves really. It's like why? Like sure you're able to get this deal and pay a lot more for it, but the only way that you could do that to get the actual returns needed is with a very extreme business plan. It's not what we do and it's not what we want to do.
Yeah, agreed. So let's shift gears a little bit. So we went to the Best Ever conference, right? A few months back. And what stood out to us was a comment around the capital structure, right? Not relying on a single source of capital. Can you expand on that?
Yeah, like I loved it and it opened my mind to different sources of capital. I mean, I took a picture of the presentation and I printed that slide up. So it says no single source should carry the deal, so no single source of capital. So it's got, individual investors, fund managers, RAs, broker dealers, platforms, family offices, institutional investors on it. And what it has enabled me to do is, okay, how do we reach all of these? How are we making it so we're having the conversation so we can do our, primary objective, which is buy mobile home parks and increase homelessness population, provide affordable housing to people. So yeah, it's really led me on a journey of like, okay, what needs to be done? How can we plant these seeds so everyone's winning? Because we want to work with those bigger family offices and PE firms, institutional capital, who want to do good, basically, for lack of a better phrase, who want to make money, generate wealth, but like while doing good at the same time, not sacrificing anything to create that capital.
And you know what I love about that is that we are aligned as a company with that value. You know,
Mhm.
doing good and doing things right. I want to be able to sleep at night, man. Like I don't want to feel like crap going to sleep. Sure, it's a business, but at the same time, how you take care of people plays a role. You want to do right. So you were sharing with me not so long ago that you spent time with a 40-year industry veteran, right? And an operator who purchased his first mobile home park back in 1980, right? So that is a veteran, well-seasoned, experienced operator. Can you share with our viewers that experience? What was the conversation like, and what did you learn?
Oh, it was such a good conversation. And I say conversation, but it was mostly just me listening because there's just a wealth of wisdom and information there. And what was interesting is this person said, I keep all the mobile homes as park owned homes and I rent it in a similar way. He's like, he considers them horizontal apartment buildings and he's going, 10 to 15 to more percent less than comparable apartments. So, you got a three bedroom, two bath apartment that's, 1700. He'll rent a three bedroom, two bath, nice, well kept mobile home for 1100, for 1200, something like that. So everyone says, or the majority of people say, yeah, you want tenant owned homes. That's the gold standard. And, it's very interesting to me to see him saying, I've been in this business a long, long time. And a lot of people who have done that gold standard, the parks, they don't work. It's not an effective way to do things. They get run down and then it's a pain. And so he was like, yeah, I just want to run this like a horizontal, affordable apartment. He's not creating home ownership in the same way that we do. Um, and yeah, man, there's pluses and minuses to things. He's definitely has a lot of experience and has seen so many things that it has gotten me thinking of, okay, it's not always one way. It's not always get in and sell the homes, rent to own. Like, it's okay, that could work, and it has worked for us many times, but maybe also like this other way would work in a different way. Definitely has is another thing that's opened my mind to how we could do something different than like what everyone else says when the situation really calls for it.
Yeah, for sure. There are many different ways to skin a cat, right? And it sounds like he's stuck to his bread and butter, and it's working for him. And what we are doing now, it's working for us now, but I think it's okay to stop and really assess other scenarios and see if that could work for us as well, right? And depending on the market, right, that could be something that we can explore. But I bet it was nice to sit down with a veteran that has seen all the different market cycles and has survived. That's quite the feat, right?
Yeah, yeah. Very nice guy too. It was good to see.
That's awesome. So let's shift gears a little bit and let's talk about numbers, right? So one of the things we emphasize is that we are operators first. To be successful, we need to follow through with the business plan and be able to return investor capital and execute the business plan, right? Can you walk everyone through the portfolio that went from roughly $262,000 in NOI to over $612,000 in NOI in under 2 years?
Yeah, I say it many times. Operations should be the foundation of what you're doing. Matthias, like, has just been such a rock star in this portfolio, and we took it over, and there was a lot of just money spent on things that money shouldn't have been spent on. And so, there were bleeding NOI and repairs on things that shouldn't have been repaired, really. And so, yeah, man, we took over, we converted a lot of the park owned homes to rent to own model, or at least with an option to purchase model, and, created homeowners and reduced all these expenses that the old owner was spending on these homes. Gradually went up on the rent, increased the occupancy across the portfolio, and yeah, it's created something a lot more stable and a lot more, well, valuable, because that NOI is it has increased by so much. And it's funny, I was saying about how I was talking to the guy and he was saying, okay, I'm gonna keep everything as rentals. That's his model. And what really stands out to me is that it's a possible model. It's not something that we're going to go in and change everything we're doing, because it's every deal is different, and every deal like has little differences. It's not like we're all of a sudden going to something completely different, but it's like, let's let's meet the deal where it's at currently and then assess the business plan from there. Are we in the future going to keep things as rentals on some deals? Probably. Are we, going to get in and try and convert some of the homes to RTO, lease with an option? Probably. But it's all very, very much, in the very early stages of working any kind of deal. It's like, what are we going to do? How are we going to get into this specific deal and create value? And so, yeah, really meeting the deal where it is, and then coming up with that from there, instead of like trying to make a cookie cutter.
Right. So some of the investors that reach out to ask about what we do, they're really new, right? So they seek to understand. For folks that don't really know what NOI is, right, net operating income, can you share why growing the NOI is so important?
Oh, sure. All the revenue you have come in, all the rents and whatnot, minus all of your expenses equals your net operating income. But why that is so important to increase is because that is how commercial real estate is valued. So you take your NOI and you divide it by what's called a cap rate, a capitalization rate, and it's market and asset type dependent. And so it's like, okay, if I have this mobile home park in this area, the cap rate is likely around this. So it's just a way to determine value. And, so say you increase that NOI by $100,000, rough numbers, if you're, using a 10 cap, which again, people don't use 10 caps really very much anymore. But, rough math means you increase the value of your asset by $100,000 or by $1,000,000. See, my math is wrong in my head. So yeah, increase that NOI by 100,000 in a 10 cap. It's $1,000,000 increase in value of whatever you have. So yes, the NOI is very, very, very important to cash flow to pay all of our preferred returns and get investors all like that nice cash flow. But it's also very, very important for the value of the property or properties. And yeah, it's definitely, the first time I did a refi on my first park, and the value of the park went from, it was like 355,000 at closing to 570,000 a little over a year later because of the work that we did. That was like magic to me. And, I understand the magic now. I understand how it works. And that's what we do. We understand the levers that we can pull to increase the value of that. So we're getting great returns for everyone. And again, at the same time, we're making sure not to be jerks. We're running these ethically and making sure that they're nice places to live for people.
So just to recap, right? We're talking about, in this case study, we're talking about a $350,000 increase in NOI, not by buying more properties, not because the market suddenly exploded, right? And not banking on appreciation. You force it, with good operations, right?
Yeah.
So under 2 years, increasing that much value on the property, that's where the magic takes place, right? And that's how you're able to refi and get investor money back, right? Under 2 years, right? Again, it's very deal specific, but the business plan is consistent across our deals, right? Forcing appreciation and improving the communities and making it a win-win situation for everybody, right? So Tim, looking at the next 12, 24 months, what are you most excited about in this space?
Well, I mean, first of all, I'm excited about the two refis that we're doing. That one we were just talking about is the next one that we'll be doing. I'm excited to see the appraisal for both of these. And again, I understand it. I know it's not magic, but there's a part of it that feels like magic to me. And it maybe magic's the wrong word. Maybe it's just like, oh, this is, the hard work we put into these things is really showing up. So I'm excited about that. And then in the next couple of years, I'm excited to be talking with ethical, bigger institutional capital partners and seeing, how we can buy bigger deals while maintaining, the humanity, maintaining them as nice places to live for people while, not going crazy on the rent or anything. So yeah, I'm looking forward to that. I do see that, affordable housing is going to blow up. So what we're doing, maybe with co-living also, and whatever other strategies come out, because things are just getting crazier and crazier in terms of affordability, man. And it shouldn't be that way. You feel the pressure on everyone, and it sucks. I hate it. I really don't like it. Even if I'm doing, like, personally doing okay, like, living in a society where so many people aren't, it just, I mean, it's crazy, man. You can feel it in everything. And there's It's like, okay, here's the problem. How can we be part of the solution?
Yeah. No, well said. So within the conversation of, us attending conferences and learning about the market and how things are changing, institutional investors stepping in, what opportunities do you think investors are overlooking right now?
Well, uh, investors it seems like, are scared, especially individual investors, retail investors are scared because they see the crazy stuff that has happened and, with syndications and stuff like that. Plus, I mean, things are getting more expensive, so they're wanting to hold on to their money and they're freaking out a little bit. And I get it. What I would say is, and I've had a lot of conversations about this, is right now things are on sale, if you will. Compared to a couple years ago where things were trading, things are definitely deals are on sale, even if it doesn't seem that way. You look at the numbers and they're trading very, very much under what they were trading. So yeah, it's a scary time maybe, to get in, but like, to me, it's scarier to not get in and just let your dollar kind of erode. So I think that's the big thing I'd say to people who are, worried right now.
Yeah. Thank you, Tim. And thank you for the insight today. I think this was a really good webinar, and I think it adds value to the listeners, especially folks that are on the sideline and that they're not familiar with the space and what we do. So, with that said, hey guys, we want to thank you for joining us today. I know everybody's busy, but the fact that you're here watching us or listening to us means that you are interested in the space. So thank you. Thank you for that. The biggest takeaway is that capital alone doesn't create value, right? Operations do. Increasing the NOI by $350,000 under 2 years by just tweaking things and good operations. That's huge, right? Institutional money will continue entering the mobile home park space, but the winners will simply be the groups with the largest checkbooks. That's a fact, right? They'll be the operators who understand their community, serve the residents, and will consistently execute, right? And that's challenging, right? So good operators do that. With that said, if you want to learn more about what we're doing, schedule a call with us. We'd love to get to know you, see if the relationship is a fit, because it really comes down to that, right? It's a relationship between you guys and us. And like I said earlier, we don't want this to be a one and done kind of relationship. We want to build a relationship, and it starts with a first date, right? So, hey, if you're interested, you just want to learn more, give us a call, schedule a call. And we're here to answer, and we're here to help. Again, thanks for joining, and we'll see you on the next webinar. Take care.
Thanks.